While the world rushes madly into tech stocks and AI chasing quick profits, one man stands apart, watching coldly. He holds a terrifying mountain of cash, exceeding $300 billion. This man is Warren Buffett. From a business psychology perspective, Warren Buffett understands the danger of herd behavior. Investors rush to buy simply because everyone else is buying, driven by crowd psychology rather than rational analysis. In this introduction, we reveal the psychological mindset that allows Warren Buffett to resist the temptation of rising markets. How does he use strict emotional discipline to protect his wealth when the masses' greed reaches its historical peak? While tech stocks and artificial intelligence dominate headlines with promises of instant wealth, Buffett remains unmoved. His massive cash position is not fear. It is strategic patience, waiting for the inevitable market correction. History has taught him that euphoric markets always end in painful crashes for those who chase the crowd. Buffett's psychological edge is his ability to feel nothing when everyone else feels everything. This is the mental fortress that built one of history's greatest fortunes, brick by brick of emotional control. Why does a man sit on $300 billion without touching it? The psychological answer lies in Warren Buffett's absolute ability to destroy the FOMO trap inside his mind. In investment psychology, humans suffer from a bias that makes them feel guilty if their money isn't working all the time. But Warren Buffett practices the highest degree of delayed gratification. He sees cash not as idle money, but as a strategic reserve option. Warren Buffett teaches us that waiting years without doing anything requires superhuman psychological immunity. Immunity against the pressures of Wall Street and investors demanding daily action. While the world chases every opportunity in panic, Buffett sits quietly on his cash mountain. This is not inaction. This is the rarest form of strategic patience. The psychology of defeating FOMO is about reframing what money at rest really means. It's not dead capital. It's loaded ammunition waiting for the perfect moment to fire. Warren Buffett's $300 billion lesson. True wealth mastery is knowing when not to act. Warren Buffett borrowed a philosophy from baseball that changed investing forever, the philosophy of the patient hunter. In baseball, a batter faces 3 strikes before he's out. But Buffett realized something crucial about investing. He said, "There are no called strikes in investing. You can watch hundreds of pitches go by without ever swinging." This is the fat pitch theory. Wait for the perfect opportunity, the one you truly understand, priced below its real value. Psychologically, Buffett refuses to step outside his circle of competence, his zone of safe knowledge. Social pressure and market hype push investors to chase hot trends. Buffett resists this entirely. When market algorithms inflate stock prices irrationally, he recognizes the danger of optimism bias in the human brain. The human mind falls victim to excessive optimism when everyone else is buying. Buffett stays immune. Instead, he adopts the psychology of the patient hunter, maintaining complete neural calm. He waits, without anxiety, without fear of missing out, until the perfect opportunity appears. The opportunity must be complete, fully understood, and critically, priced far below its true intrinsic value. This is Warren Buffett's deepest psychological edge, the discipline to do nothing until the right pitch comes. Warren Buffett holds a secret that built his empire, a psychological truth about money that most investors will never understand. In this final chapter, we uncover the biggest lesson Warren Buffett teaches us about the psychology of money. Successful investing is not about predicting market movements or trying to time the market perfectly, because the human mind is utterly incapable of predicting a random and chaotic future. Warren Buffett proves to us that true psychological self-mastery and complete emotional detachment are what create billionaires. Detachment from the red and green screens of trading terminals is the secret. When Berkshire Hathaway holds this historic cash reserve, Warren Buffett is sending a clear signal. Psychological safety and liquidity during coming market crashes are thousands of times better than illusory profits built on bubbles of greed. This is not about fear. This is about absolute psychological control over your financial decisions. While others panic and chase trends, the true investor waits with discipline and patience. Warren Buffett teaches us, wealth is not built by chasing every opportunity, but by choosing the right ones and waiting. The greatest investors do not react to market noise. They create value and let time do the rest. Follow us for more.